Happy Friday, traders. It is 8:01 a.m. Chicago time on the 11th of May, 2018. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we are teetering on unchanged in the S&P, basically up 4 points. That could be taken back at any point before the open. The leaders today, the cable, the euro, the gold, bonds. It looks like it's a mixed bag. The NASDAQ is down 6.5 points. The Bund is down 10 ticks, and the Russell is down, looks like 3 ticks. So it's just a mix today. Probably a resting day for the market, but we'll see about that. Overall, nothing drastic to report this morning. We did have some releases at 7:30, but overall, not seeing anything that's dramatic. At 10 a.m. today, University of Michigan confidence, the prelim for May expected at 98.3. This is a number that often moves us if it's way off. Other than that, the calendar is pretty clear. Nothing coming in to interrupt our auction today, except for that. Let's jump right in to our review. Yesterday, we talked about the fact that we're opening in a gap and a strong potential for a push up. I expected somewhat of a balancing day given the trend day that we had before it, but I did expect the market to remain above Wednesday's high, which it did. This scenario here worked out, but we did push higher than what we see here. We pushed into 27.25, maybe something like that, and so I was very unambitious, and the reason I was is because we did have a bit of a run, and I expected that the market is likely to rest after running up on Wednesday. So that scenario was on. I can't say I traded it well. It just I didn't see very good opportunities to get onto the long and hang on. The secondary scenario did not work out at all. This is a scenario that would have us test the 2700, consolidate, and then fall through. Here's what actually happened. We open at 2704 quarter. We test up to 06. We test down to 03. We have a 3-point opening swing. The market immediately extends higher to 2709 and then pulls back to 2703 area, and then boom, explosive move up, and it starts to push all the way up to 25. 2720 was an important area, and then it rotated back to the mid right here, and that was pretty much it for the day. The mid long, and so I took a stab at a short somewhere. Let me look at my book map. Did take a short. I think I took a small short. Yeah, I took a small short at 2720 something, 2722 or 2720.50, and had to cover those for I think a 7-tick loss or something like that. So it's not my kind of market, a market that just sits around and then has a big move with no pullbacks so we can get long with it. It's just the way the cookie crumbles kind of thing. And so we wait for pullbacks to key areas, in this case, the mid from yesterday. We finished the IB being what it was yesterday, just 6.75 points, a relatively small IB when compared to what we've had over the last month or so. The next smallest IB goes back to March 21st. We extended that IB more than 2 times. The point of control is in the upper quartile or upper 25% of the range, and so on. Yesterday qualifies as a trend day, barely. So that's what we have. We introduced a gap between 2703 and 2700, and as far as what we've done in the overnight session, just to follow this narrative, what we've done in the overnight session is we opened right where we closed. So we went sideways around the point of control for pretty much the entire Asian session. The European session opened somewhere in here. A small pullback, and it pushed up from 16.5 to 26.75, 10 points. The volume is relatively normal, and we really didn't accomplish much. We pushed yesterday's high by 7 ticks and are sitting in the middle of the accepted range from yesterday afternoon. So overall, not much to glean from the overnight session other than to see that it's relatively, it's 10.5 points, pretty small relative to ranges recently. And it's fairly balanced with what looks like a small double distribution. There's not much structure in it, and not much to glean from the overnight session. As far as our plans for today, first, I'd like to remind you, it is Like Friday. Take a moment to find the like button. If you don't see the like button, hit the YouTube icon at the bottom right of the video. We'll take you to YouTube's live streaming version of this video, and then hit the like button, the thumbs up there. There are still a few clowns, 2 clowns who keep showing up and hitting the thumbs down, which is great. At least they're listening in, or I'm getting their attention. Maybe they'll change their mind someday, but please hit the thumbs up because it helps me out. As far as what we're expecting for today, again, as explained before, these gray bars, they're called stock zones. That's a trademark name. They're called stock zones. And what these outline are areas that I'm going to, if I'm going to engage the market in any way, those are the ideal areas. Now, it doesn't mean that I only trade in those areas. I attempt to do that. However, we have market-generated levels that come in during the day, or zones that come in during the day, like mids, IB high, pullback to IB high, which is also a low volume node. That stuff I'll initiate there. But stock zones are predetermined areas to do business, and these are important. They are released and updated for the charts of Convergent members. It is part of the membership. They're dynamic. I update them, and they change for everybody. They get updated on their charts for IRT and Bookmap. So these are the bands that it's not just noise. These aren't random. These are just important areas to engage with the market. And so with that being said, we're opening in range. In value, there's not really, yesterday established somewhat of a value, pretty Gaussian once it got to the high. But the value area is not valid, of course, because we have a trend. So we're opening inside of acceptance, and so we have an open auction in range, in value, probably, and the expectation is for the market to revert down into the point of control. I'm expecting it to test potentially all the way down to 27.15 before we get the response. And I'm looking to extend this high, extend the high somewhat today. But mostly I'm expecting a fairly choppy Friday. We've had a lot of activity. We've covered a lot of ground. Buyers did a lot of work this week, and I'm expecting that to be rebalanced into the weekend. I'm not expecting anyone to initiate a big position into the weekend. So this is the expectation. I expect the high to be taken out with a relatively high probability, given how we finished yesterday. I'm expecting it to test the range of where the bulk of the volume occurred, which is somewhere between 27.15 and the high. And that's where we're opening. We have an MCHVN, a high volume node at 2720. 2720 was very important last month. There is a high volume node. I could pause here and show you where that comes from and stuff, but just draw a profile from the 2nd of February and include yesterday in it, and you'll see that 2720 is very prominent in this area. It's the most accepted price in this area. Okay, from here to 2742, and up and then down, it goes down to 2700. So we are dead in the center of two key low volume nodes at 2700, 2742. The high volume nodes at 2720. Dead center is 2721. But, you know, this isn't a perfect science. So this area here is expected to be choppy. That's why I'm drawing this kind of movement towards 2720 and consolidating there before we start to break higher. That's the primary scenario. Early aggressors initiating is the second scenario. Consolidate, push, pop through. And then I'm expecting it to consolidate outside and fall back in and then basically test from the top. If we do test from the top, we might see 2713 again. I'm interested in buying that price. And that would be the second scenario. Okay, so that's what we've got for today. I'll keep it short and sweet. But I will remind you, just like I've always reminded my prop traders on Friday, this is by far the worst day to get emotional. It's also the day that tends statistically over a period of, 7 years of collecting data on multiple traders. Statistically, Friday is the worst performing trade by far. Trading day by far, not just in terms of losses, but in terms of returns for my prop shop. And I see that continue on with online traders as I look at the S5 Trade Analyzer, which splits out days performance on live accounts. We see the same. We see that a lot of traders would do well to avoid Friday. So that doesn't mean you can't make money in it. It doesn't mean you can't lose money in it. Seems like the bias is to lose. However, it just means that this is the day where people tend to get most charged, most emotional. A lot of volume goes off on Friday with the lowest return. That tells you emotions are in play. And so just pay attention, be more picky today. That's the point. Okay? Don't allow the market to burn a hole in your pocket today so you can carry that weight into the weekend. It's a pain in the ass to do that. I've done it many, many times. Good luck today, and I'll catch you Monday. Take care.